Okay, do people see my screen?
Yes, we do.
Yes.
Great. Okay. I think we can just get started now. Yeah. Hello, everyone. Very nice to meet you all. It's great to have you today. I'm the founder and managing partner of Vectors Capital and also Vectors Angel here today. So I want to thank you for taking the time to be here. Either you're the startup company or you're the angel investor here or you're the VC here. After today, I hope you can find a partner to work with, to collaborate, or just use this experience opportunity to share more about your company. So just a little bit more about Vectors Angel. Is founded in late 2019 and focus exclusively on angel on impact-driven investment. Oops, what happened? Yeah, and we focus on sustainability and healthcare deals. Stage focus is pre-C to Series A. We have formed 9 SPVs so far for companies. Yeah, so if you're interested in getting investment from us, you can submit your deck to our website. But we're also recently launching our own venture capital fund. So the process will slightly be different for engaging our angels to the companies going into the future. So for us, we focus on the we call it Vectors direction. We want to support companies that you can have both the impact return and the financial return. And we believe the both axes are important, and that's a positive vectors going up. Yeah, so we welcome all the angel investors to be involved. As long as you're a credit investor, you're welcome to be a part of our community. We welcome any deal referrals, and we also have investment fellowship programs we run every 6 months, and now it's also serving the fund now to be a part of our deal team. And next cohort will start in January 2023. If your bigger family office wants to direct your money into certain areas, we can also work with you to form very big SPVs just for you in those specific impact areas that you're excited about. And then we always look for co-investors to work with. Yeah, so I want to use this opportunity to introduce our summer 2022 cohort members, Philip, Amanda, Jessica, Lizzie, Vashel, Justin, Zijian, and Prashi. It's great to have you all here. As being mentioned, we're launching a fund. So the Vectors Climate Frontier Fund is a 20 million early stage VC funds that invest in frontier technology solving climate solutions. If you're interested in investing in our fund, we're going to have our first close relatively soon. By investing into the fund, you get the opportunity to really work with the companies more in depth, and it's a good asset management tool if you want to just chip your money and get into a lot of companies and create impact together. Companies presenting today. So we have several awesome companies joining us today: Ample Health, Harvest Thermal, the Croft Company, Kairospace Technology, Suryatech EV Power, Green, Celadyne, BioEsol, Popion, and SpringEats. Please excuse me if my pronunciation is not 100% correct. But we look forward to hear your presentation today. The format is 5 minutes pitch, and our investors will vote for their initial impression about the company, and we also host a Q&A breakout room in the end. All right, so I believe we should hand it to Matthew, but I wonder if Matthew have got your computer set up yet, or we can just directly go to the startups.
Let's go to the startup, I think.
Okay, all right.
Oh, he's co-host now. Okay. Oh, that's you. Yeah, I think he's gone. His batteries are gone as well.
Okay, so I will stop sharing and I will have our startups to take control now.
It's me today. So my name is Juan Bravin. I'm CEO and co-founder of Kairospace Technologies. Kairospace is an early-stage startup dedicated to the development of water technologies. We're a group of scientists, entrepreneurs, and technologists dedicated at solving world's most pressing issues. We have been part of two accelerators, the Cleantech Open and the Valley Ventures Accelerator, and we are connected with several academic institutions to validate our technologies. So we set up to develop what we call the Kairospace wave of innovation, that is to bring water technologies to different industries with the purpose of delivering value and diminishing their environmental impact. Our first goal is to improve agriculture, but we have seen that growers, the people that feed us all, are going through serious hard times, and they're suffering challenges as ever-increasing operating costs, as land degradation, environmental impact due to their practices, food safety problems, regulatory compliance. And when we asked them why is that you're not improving your efficiencies, we learned that the main reasons were that they were lacking capital, and there was like a sort of skepticism, lack of trust and support to try new techs. So we envisioned the Kairospace solution for agriculture that consists in the provision of a hardware tied to a low-risk business model that we call it water enhancement as a service, and that is supported by a platform where growers will be able to share their knowledge, because we believe that a rising tide lifts all boats. Our first product, we call them the AG Packs, and it's a clean tech water treatment platform aimed at sustainable food production. What this system does basically is to convert water into an optimized water that will enhance an ag operation, from seed germination, vegetation, washing the plants and treating diseases, up to treating their wastewater coming in. I won't get into details on technical, but I will be happy to explain that. Our systems are very easy to integrate. They can work upstream to treat the water that is going to the crops, or downstream to treat the wastewater that is coming from any ag industry or food processing facilities. The systems operate in an automated fashion, and they do not need the attention of the growers to operate, so they don't have to change anything. And basically, they're going to see increases in yields, increasing nutritional quality, and savings in fertilizer use and on water usage. We have validated our technology extensively on the bench, from seed germination to extension of shelf life, from improving the amount of bricks levels, increasing the nutritional quality of the foods, to increasing the yields up to 18%. We have also validated our technology by a third party in Canada to remediating mining effluents. We achieved 100% reduction in ammonia. And this is a hot topic now because regulations are becoming more strict throughout the world, and companies are looking for new ways to treat their effluents and to be in compliance with the regulations. We recently launched the company commercially. We have already two contracts on agriculture, and we are running a pilot with a mining company in Canada, and we have many companies that range from golf courses to production of biomass, cotton, soy, that we're working now in the agreements with them. Our revenue model is to rent our machines. For our smaller units, we charge $1,000 per month. Our cost of building the units is $12,000. And the idea is that if customers do not sign for an agreement for less than 36 months, we would charge a setup fee. Then we're also selling some of our technology packs to distributors and to integrators. And our go-to-market, we're targeting specifically now greenhouse and vertical farms due to the size of our systems. But as we scale up the technology, we're going to be able to target larger farms. And for those larger farms, we're working on strategic partnerships with manufacturers of large-scale irrigation systems. The ag market only in the USA is huge, providing a TAM of over $7 billion. And we're targeting greenhouse, vertical farms, cannabis growers. Any farm with any type of irrigation system can benefit. Wineries, supermarkets, especially at aiming and increasing the shelf life, and flower growers. Compared to the competition, why Kairospace stands apart is that we have combined many technologies that are being used segregated under a single platform, and we have developed our proprietary technology for this purpose. So with one supplier, customers can get benefits from 3 sets of technologies at a much more convenient business model. We plan to expand into other markets that are growing and that represent a major problem for how humanity deals with water. And at the moment, we are fundraising. We are looking for 600K for a 12-month runway. We're planning to use that money for sales and marketing, to continue with the manufacturing of more units, to prove the technology in multiple commercial deployments, to prepare for our seed round, and to file 3 provisional patents based on the technology that we have developed. Thank you very much.
Awesome. Thank you so much, Juan. All right, sending out the survey for that now. And while we are waiting, if anyone has any initial questions for Juan, please feel free to do so, or ask them in the chat directly. And Meyer, if you are also here, feel free to start getting ready. All right, Meyer, just give it 1 minute left before kicking it off. All right, Meyer, the floor is yours. Feel free to begin.
Thank you, Matt. Hi, everyone. Myself, Mayur Kamlakar. I'm the founder and CEO of Suryatech EV Power LLC. So what is the company purpose of Suryatech EV Power? We are committed to give excellent EV charging experience. Suryatech EV Power is the pioneer of hybrid solar plus grid-tied EV charging station solution. We have a patent pending technology which will be used to deliver hybrid solar and grid-tied clean energy solar power for charging electric vehicles. You can see the team here. Myself, Mayur Kamlakar. I have my master's in solar engineering and currently working in the solar field for around 8 years. Omkar Bhandarkar, he is the head of product development. He has the master's in solar engineering with bachelor's in mechanical and around 7 years of experience in the solar field. Gerber Ramos, he has a PE in the mechanical engineering and has already worked on few startups earlier and has successfully exited. Del Jones, Ronaldo, and Taylor, we are a great team of mechanical engineers and supply chain team. And Taylor has a great experience on the project management side. Our startup has also been receiving funding from University of Massachusetts Lowell, and we have an advisor who is the director of the UMass Lowell Solar Department. So what is the exact problem right now? Currently, there are more than 2.2 million electric cars in the US as of August 2022, and the number is significantly going to increase. According to the research, 55% of the vehicles in the US by 2030 will be electric vehicles. Currently, right now, there are only 2 commercial EV charging station suppliers apart from Tesla who are providing grid-tied power for charging EVs. So the solution which we have for our product is Suryatech EV Power provides eco-friendly way to charge an electric vehicle. Suryatech EV Power charging station is hybrid and uses both solar and grid-tied electricity. 8 vehicles can be charged simultaneously at the same time 24/7. So during the daytime, the charging is done through the solar power and it automatically switches to the grid-tied connection at night. All charging stations are connected to the cloud server and can be monitored remotely. Users will have access to the phone application, which provides them real-time status for the charging. And our charging station is 100% movable. So based on the traffic where there are more EVs or based on the zip code locations, we can easily move those EV charging stations. Our targeted customer for this particular product is the EV user who doesn't have basically charging option at his home. So he is basically renting an apartment, or a EV user who is on the go and traveling somewhere and right away needs like a commercial EV charger. So our EV chargers are universal. So the Tesla ones only charge Tesla cars, but the chargers which we have are universal and you can charge all manufacturer electric vehicles and also Teslas. So this is the basic system diagram. You can see we have got the patent filed right now and it's pending. We should be getting it sometime in like March of next year. So this is the overall sketch where you can see there are 4 EV chargers. 2 of them are fast DC chargers with 150 kilowatts and the rest 2 are fast DC chargers with 250 kilowatts and the whole solar structure. So each charging station has 2 plug-in wires. So you can simultaneously charge, the user can charge 8 cars at a time. So this graph basically gives the distribution for each states. Like we have just taken into account 6 states here. So you can see the bar blue one shows the number of EVs as of August 2022 versus the orange shows the EV charging stations as of now. So in future, the blue graph is significantly going to grow, and we also have to make sure that the orange grows. So there is a huge demand for EV charging infrastructure. Right now, there are only 2 major competitors, EVgo and ChargePoint. Both of them are completely dependent on grid-tied power. They don't use solar. And the EVgo currently charges 0.29 per kilowatt hours, and they have a monthly subscription fee of $6. And ChargePoint charges 0.24, and they have 39.99 monthly subscription plan. So Suryatech EV Power, we will be charging somewhere close to 16 to 19 cents per minute, and our monthly subscription plan will be $9.99. So we are the cheapest right now if we go with the solar tied EV charging station. So this is the roadmap. Right now we have a patent pending. But in June, we already done the design and we have successfully completed our prototypes. Material procurement will be done in November. Phone application is expected to be completed by 4th quarter this year. And we are looking to raise some funds and start installation in January 2023. Revenue model, we do offer monthly subscription versus pay-as-you-go model. And these are the financials here for year 1, year 2, year 3. We calculated those based on the current competitors. So team achievements so far, we have selected vendors for EV stations. We have basically in talks with Dunkin' Donuts to install charging stations at their retail locations. We have also received acceptance letters from 25 gas station owners in Florida and Texas. Our investment ask is $1 million. Thank you. If you have any questions, please reach out to me. Sorry, I'm like slightly beyond the time, but please feel free to reach out to me.
Awesome. Thank you so much, Meyer. I'm going to send out the poll for that now. And Franz, if you're here, please start sharing your screen. But Meyer, we'll need you to disconnect real quick. Here we go.
You got me here, man?
Franz can hear you, can see it, so give it 30 seconds and then we'll let you go. All right, Franz, floor is yours.
Wonderful. Hello, everybody. I'm Franz Hochstrasser, CEO and co-founder of Raise Green. We are the climate investment platform. I've been working on climate for about 15 years now, climate and energy, at the Obama White House, and I helped negotiate the Paris Agreement and came out of that experience with two main concerns. One is that we need a lot more capital flowing into climate solutions, and the other is that we need a lot more people involved as well if we're going to tackle the climate crisis. So we see two major market opportunities. One, it's difficult to finance the types of projects that we've been seeing and hearing about today. Distributed energy resources are projected to be a $110 billion market by 2025, but getting access to capital for those cutting edge technologies and even established project finance companies can prove challenging. At the same time, you've got 85% of individual investors and a full 99% of millennials that want more sustainable investment opportunities, and public equities are generally greenwashed versions that don't have genuine impact. So we can unite these two interests and market opportunities, and that's what we do at Raise Green. We're a marketplace that brings together climate companies with investors. So we give climate companies the ability to set their own financing terms and list projects on our SEC and FINRA registered marketplace, which gives them credibility, and it gives them the ability to access customers and engage their community directly. And at the same time, investors have the opportunity to use our SEC FINRA registered marketplace that does a know your customer anti-money laundering check on every investor. They can access this new ESG asset class, and anyone, including accredited, non-accredited, and institutional investors, can come in on the deals. Now, we see a major pain point in this space, which is high soft costs and transaction costs associated with doing project finance, as well as doing climate tech investing in general. And so we built the first business process automation software in partnership with IBM, although we own all of the IP, to generate templatized and replicable project finance documents. So it's a guided journey, walks people through the process of collecting their variables, applying a template set of documents, and then outputting a fully financeable deal. And we won a 2021 IDC Future of Digital Innovation Award for this technology and took it through the TechStars program. But what has us especially excited now is that the Inflation Reduction Act has passed, and we are set up to plug and play to help companies of all types access this capital, which now, due to that bill, decreases the costs of that type of technology by on average about 40%. So we heard about heat pumps earlier tonight. Those are 26% more profitable as a result of this bill going through. And this cuts across the board. We're 24 months ahead of any other company in preparing for these policy improvements and being able to deliver on them. So we're already acquiring customers. 2.6 to 1 is our lifetime value to customer acquisition cost ratio. So we're doing it profitably. We have about a 40% month-on-month growth rate of our investor base. Folks like William Bowen, who care about investing because of the future they can leave their children and believing that it can add up into big dollars. There are $13 trillion in retail investors in the US alone. We've also had great traction. So we've done 15 securities offerings to date, 16 as of this morning, because we just launched our 16th, with folks like the Connecticut Green Bank and Block Power. And we've done more than 1,100 trades from 2,200 accounts at this point, from $100 all the way up to people investing $400,000 in a single raise. In total, we've done $5 million in gross transaction volume through the marketplace, and we have a $13 million project pipeline of solar, energy efficiency, climate tech companies moving through this year. Now, we make money off of a 5% success fee and a 2% security stake in each deal. So on $1 million raise, we're getting $50,000 up front. We're getting 2% or $20,000 in securities that sits on our balance sheet and pays out kind of like an annuity. Last year, we did $250,000 in revenue. This year, we're tracking toward about a $600K run rate. And we're planning to increase that. So the way we're going to do it is scaling through our our early product market fit. We have an 18,000 person newsletter, and we're adding customers profitably on the investor side, and then continuing to expand our template library of the software, making it easier to finance all different types of deals. And then repeating, rinse and repeat with sales channels. We've signed on an MOU with Onyx Renewables that has perpetual tax equity, which becomes a lot easier for us to access now that there's transferability due to the Inflation Reduction Act. We've also been working with the Department of Energy on the Credit Ready Solar Initiative and one of the largest solar panel manufacturers in the country. So I mentioned my background. I went to grad school at the Yale School of Environment and met my co-founder, Matt Maroney. We studied sustainable finance. Our third co-founder is Jackie Logan. She has 20 plus years of capital markets experience herself, most recently Goldman Sachs. Our CTO is Charlie Berg with 7 software exits. We're a phenomenal team that has the right expertise to capture this opportunity and deliver, and we have 10 full-time. We are raising a $2 million seed round. We have 1.3 million committed to date. We would love to work with you all to get the additional 700,000 in by the end of the month and put it toward primarily expanding our technology and adding more customers through marketing so that we can break even by around this time next year and build towards a Series A around that time as well. So thank you so much for your time. I hope we can earn your investment. Appreciate it.
Awesome. Thank you so much. I'm going to pull up the poll real quick. And Gary, if you are here, please feel free to get ready for your pitch. All right, Gary, gonna give me 50 seconds here, and then I'll let you have at it.
Take your time. I am actually trying to figure out how to make this thing go full screen. Because right now it's not doing it. And Zoom is not letting me go, like, see the preferences to actually go full screen.
That is the downside of using Adobe PDF.
Yes. But I will figure this out. Okay. Got it. Made it work.
All right. So you know, we still see the Adobe side, not like a presenter view. So I mean, either way, all good. Just so you know.
Okay. I'm gonna click resume share real quick and see if it goes. Is it still the Adobe right now?
Yes.
Oh my. Let me try again. Does this work?
There we go. That's perfect.
Okay. All right. Shall we get started?
Floor is yours.
So, great. So I'm Gary Ong. I'm the founder and CEO of a company named Celadyne, and we're here to enable low-cost renewable hydrogen for trucking and heavy industries. Specifically, we're going to use a materials approach. So a lot of the companies before me kind of took the heavy lifting on introducing hydrogen, introducing the Inflation Reduction Act. So thank you for that. So I'm going to piggyback off of your presentations and tell you a little bit more. But the point here stands is that the opportunity for us to act for hydrogen is now. So what I'm showing you here is the installed capacity in terms of megawatts for electrolysis to make green hydrogen over the next decade. You'll see this thing has an inflection right around 2028, which means by around 2028, we will start deploying a lot of electrolyzers so that we can create more green hydrogen that would replace gray hydrogen that's traditionally made from steam methane reformation. Which is to say, if you want to improve electrolysis or anything related to hydrogen, you must do it before 2028 so that you can integrate into the systems and ride this wave. Okay. Why do we want to do this? Well, it's because hydrogen gives us a unique opportunity to decarbonize difficult to abate sectors. So I'm not talking about light duty systems anymore now. We're talking about heavy duty trucking, shipping, or heavy industries like cement, steel, concrete, places where size, scale, and cost matter. So it's not as simple as just charging up a battery anymore, or like an iPhone or even a light duty vehicle system. These are really heavy industries that use a lot of energy. Kind of trivia for everyone, about 50% of emissions actually don't come from transportation for the human world. Most of it comes from manufacturing and the transportation of goods. So by using hydrogen, we get to decarbonize these difficult sectors and make the world a better place. Because of that, hydrogen is now set to become a $1 trillion opportunity. And we're going to be using it across many industries like industrial heat, transportation, grid storage, cement, and steel. Right now, we're using it mostly for fertilizers and petrochemicals. But even then, it's actually a multi-billion-dollar industry. So we want to tap into that. How Celadyne enables that reality is by two ways. Number one, we dramatically help to reduce the renewable green hydrogen production costs. So you saw just now in the earlier presentation that hydrogen currently stands around $3 to $4 per kilogram. Even after you've scaled up everything using existing technologies, you'll still be stuck around $1.90 or $2. With our final last mile improvement, you can get it below $1.50 per kilogram. That makes you better in cost compared to methane-derived hydrogen. Now, we don't just solve the hydrogen production side of the problem, we also solve the usage side. One of the beauty of our solution is that you can actually use it to enable fuel cells to replace the diesel engine. What we do is dramatically reduce the cost per mile for fuel cells for heavy-duty trucking, because we don't fix efficiency in that side of things, we fix durability. So right now, fuel cells would last maybe about 2.5 to 3 years. We can extend it by 5 times to make it last 15 years. So a quick primer for those who are not familiar with electrolysis and fuel cells. The electrolyzer is what you use to turn water and electricity into hydrogen. And the fuel cell is what you use to turn gases like hydrogen and oxygen or air into electricity. What's the secret sauce? How do we do all of this? Quick primer on material science. Our innovation basically fixes the membrane at the center of a fuel cell or electrolyzer. It's the same membrane. What we do is we build upon the existing membrane platform and we fix one known problem of the field. We enable those membranes to block hydrogen better. What that lets you do is allows you to use thinner, more conductive membranes, so you have less resistance. That gives you higher efficiency. Now, for the fuel cell, because you don't have any hydrogen crossing over your membrane now, you shut down undesirable reactions that end up degrading the membrane. So this technology was invented during my PhD, and we've been working on this for the last 2 years. Because this is a materials technology, the business model is pretty simple. We sell materials. And one of the beauty of this is that we can get to market quick because it's a coating solution to an existing material that's used in the market. That's why we can ride this wave as soon as possible. We can serve existing markets like even hydrogen fuel cells for forklifts before proceeding to going towards heavy duty systems for fuel cells, and then finally really making a big impact by addressing hydrogen electrolysis. So how far have we gotten? Well, we're shipping materials to potential partners right now. And this is just a short list of people that we're in the process of shipping. So on the left side, we have the chemical manufacturers. And then on the right side, we have our end users, and the center is our end users as well. Our customers, in short, are basically fuel cell developers and electrolyzer developers. Our acquirers and channel partners are the chemical manufacturers. Hopefully, we're trying to get one of them to help us scale. And eventually, they'll acquire us, most likely. Now, the team, like I said before, I invented the technology in my PhD. I was joined by Corey, who was also in the same research group where we came from. I was from Berkeley, he's from Austin. And after that, we've hired on many electrochemists and ultra qualified people across the industry and ecosystem, because Celadyne was also incubated at the premier national lab in the US for hydrogen, which is Argonne National Lab. So we've grown now to about a team of 9, and we're advised by incredible investors like Shell Ventures, as well as an accelerator we graduated from in Austin, and we're advised by technical advisors at Argonne as well, and other entrepreneurs in the clean tech industry. So with that, we currently have a round, 2 million equity round via SafeNote, closing at the end of Q3. We have about 250K committed, and we have investors due diligence with 2 other potential investors for about $1 million in the raise. And the whole point of this raise is to scale and deliver membrane products to our customers. So I also want to take a moment to thank everyone who has supported Celadyne here. We're actually a recipient of multiple SBIR grants to ARPA-E, DOD, and the NSF. And then we also have investments from Shell Ventures, as well as some mentorship support from Toyota. And with that, thank you very much.
Awesome, Gary. Thank you so much. And thank you for also doing this in such short notice. So I was sending out the poll for that right now, but while we're doing that, let me make sure we get the next presentation up and running and make sure I didn't forget the order. All right, so next up is going to be BioEsol.
We have a question in the chat box.
Oh, can you read it out loud real quick?
Of course. So the IP, we have two. One's filed, two is filed through the company, one's licensed to the university. And then this is what's the safe cap. It will hover somewhere around the 10 mil range.
Alrighty, while this poll wraps up, Gary, I'm going to let you go back to hanging out for a little bit. But the next presentation was also submitted by someone who couldn't be here in person today. So the company's called BioEsol. So bear with me for 30 seconds while I pull this up properly. And we hopefully hear it correctly the first time.
All right. Thank you, Matt. Thanks for this opportunity, by the way. It was nice seeing you the other day.
Nice meeting you in person too. Alrighty, can you see my screen, everyone? I'm going to ask you this obligatorily this time.
Yes.
Thank you so much. Awesome. Let me get this started then.
Hi, I am Felipe Riol, co-founder and CEO of BioEsol. It's hard to believe, but just a few days ago, a baby surgery went badly wrong when the power was cut in the middle of operation. Energy problems happen every day with more or less consequences. And not only do they include power outage, but also high energy costs and negative climate impacts. And it doesn't have to be this way. At BioEsol, we take care of these issues by building an energy intelligence software and a revolutionary battery solution that increase renewable energy use and provide continuous power for critical applications, all developed within a time frame and cost that outcompetes the rest of the market. Our software is powered by AI and weather forecasting. As a result, companies take complete control of the stored energy and ensure 24/7 continuous operations. So what makes BioEsol better than any other battery company? Let me share 3 patterns that showcase our innovative approach. First, we double the lifespan of our battery, twice as long as any other brand. Second, our battery functions without any interruption, not even microsecond. No other company has been able to do this. And last, we supply electricity as direct current at 148 volts, 3 times higher than their closest competitor. In addition to this, our unique business model allows us to cover the gaps that other players don't meet. So far, we have seen positive results with more than 30 companies. For example, a company is building fully energy independent by plugging our battery into its solar panels. They know how all the power they need for all daily operations, saving 100% on energy costs and producing 0 CO2 emissions. Market-wide, we are focusing on the sectors that are most affected by the cost and the quality of the energy. Did you know that more than 20% of renewable energy is waste due to a lack of energy storage? The IRENA estimates that the world needs 150 gigawatts of battery storage, and today we only have 11% installed. Our market has a global value of $200 billion. We are a proven B2B continuous energy solution, offering our solution through an innovative subscription service. We have already signed up 33 customers with an annual run rate of $800,000. Our sales projection shows exponential growth, planning to grow 30x in 22 and have reached a $200 million goal by late 24. BioEsol team has deep experience in entrepreneurship and the energy sector. It co-founded leading lighting company in Mexico and has had 4 exits. Our philosophy and metrics are totally aligned with 3 United Nations SDGs. We are currently raising $1.5 million. This capital will go to optimizing our manufacturing process, sales and marketing, and key hires to kick off our expansion strategy. Now is the time to scale. There is a huge and unsatisfied market actively looking for this solution. Partner with us and let's impact together. Thank you.
Awesome. And that was BioEsol. So let me send this all to you very quickly in the poll, and then we'll get on to the next company. And the next company on the list is Popion. So if the team from Popion is here, feel free to get started sharing. All right. And Tati, just give me about 30 seconds before starting. All right, Hadi, the floor is yours.
Hello, everyone. My name is Hadi Hajimiri. I'm the founder and CEO of Popion Mobility. We are a Silicon Valley technology company pulling together a battery swapping solution for the commercial fleet industry. This will provide a gas-like fueling experience for EVs. Our solution is providing the fastest fueling. It's the most economical compared to other alternative fuels. It's convenient from the fleet perspective. It's highly scalable, can be scaled up to thousands or millions of vehicles, and it's vehicle agnostic. Again, this is a solution that provides 5 to 10 minutes of fueling for commercial fleets. If you're familiar with this space and you've heard battery swapping in the past and you think this is a dead solution, it's actually pretty alive, especially in the Asia-Pacific region. There's plenty of companies who are providing battery swapping solutions for the EV industry, working on a number of different vehicle platforms, from scooters to three-wheelers to NIO, a Chinese company who's working on a SUV doing battery swapping with hundreds of stations throughout China. Plenty of other companies doing battery swapping for trucks or other heavy equipment. Popion is a unique Silicon Valley take where we're working on a universal battery pack technology and fueling solution for commercial EVs. So that includes on-road vehicles, medium to heavy-duty vehicles, and off-road equipment, construction equipment, agricultural equipment, or port and material handling solutions. So the point here is that EV fueling electric vehicle charging is not a winner-take-all market. So there's plenty of other solutions that are happening around the world. We are bringing this battery swapping technology to the heavy-duty vehicle and equipment market. Our strategy is to work and build an ecosystem, work with the suppliers and vendors so that we can bring a turnkey solution for the fleet operators. So that includes vehicle assembly partners, so the companies like Lightning eMotors, Complete Coachworks, Revo, and so on, that have expertise in facilities and capabilities to build custom-built vehicles for the commercial vehicle industry. That, as well as other partners that we're bringing together, from battery pack manufacturers to utilities to infrastructure developers like Siemens and NLX, to robotic and automation engineering firms like Southwest Research Institute. So throughout this approach, we're building an end-to-end system for a fleet. From vehicles to the batteries to the automation system to the site development and so on. We're currently working with some of the largest fleets in the US in two categories, the bus market and the truck market. So these are large municipality fleets as well as trucking fleets that are planning to transition to zero emission, and they're piloting with different types of technologies. So we're right now having these conversations, and the plan is to latch onto a customer with our pilot projects. Our solution is the most economical compared to diesel, compared to standard electric and hydrogen. So the way we can do this is the fact that we bring down the footprint of infrastructure. Our charging solutions are the most compact. We put less batteries compared to standard EVs because you can get unlimited range by battery swapping. You don't have to put a lot of batteries on the vehicles. And the idea that you're decoupling charging from the vehicle idle time, and you have batteries sitting on the station, so you can use up any available power on the site, as well as renewable generation, it brings down the electricity cost. So all in all, the total cost of ownership for a fleet operator is going to come down to the diesel levels, and you would get a zero emission solution. Our roadmap is that with the first projects that are going to be commissioned in key geographical areas, we continue to develop those into regional networks. And then ultimately, in the 5-year time period, we will have the first EV crossing of trucks from coast to coast in the US. And beyond that, our vision is that this technology can be taken to global markets, as well as getting into off-road markets, airport ground support equipment, construction equipment, electric aviation, and so on. It's very hard to imagine that these equipment, off-road equipment, are going to have a wire hanging out for them to get a charge. So a battery swapping solution can penetrate those markets as well. So in terms of investment, we are raising a 300 to 400,000 safe round at this time to complete our prototype vehicle and get a few of those customers that I talked earlier across the hump and get some LOI signed. A little bit about the team. I am based in Silicon Valley. I have over 10 years of startup experience with a few startup companies that all of them ended up being in the multi-billion-dollar IPO marketplace. We have assembled a team that have decades of experience in building commercial vehicles, building powertrain components in the commercial vehicle industry, as well as building facilities and bringing to market EV vehicles. That's about it for us.
Awesome. Thank you so much. And I was setting up the poll now for everyone to fill out. And while everyone's filling that out, SpringEats, if you are on the line, please feel free to start sharing your screen and give us about 1 minute to let everyone fill out the poll so we don't distract from you.
Good evening, everybody. Hope you guys are doing great.
I'm doing well, thank you.
Wonderful.
All right, if you want to get started, go ahead, floor is yours.
Absolutely. Thank you, everybody, and good evening. My name is Freedom. I am the co-founder of SpringEats. We do waste-free deliveries from farm to table. Single-use packaging is America's dumbest problem. 10 to 30% of a product's cost is packaging. It's even more inefficient and wasteful with delivery. Packaging adds to the cost of food and contributes 29% of American carbon emissions. SpringEats is the opportunity to do waste-free grocery profitably. Here are the unit economics on just one item, a pound of strawberries. We are fully vertically integrated, so we buy at a low cost and sell at a higher price. I hear you thinking, but we are not making the same mistakes as recently failed startups. Our model's efficiencies create an entirely new category, and incumbents are completely ill-equipped to transition operations. Our customer, Susan, places her order online, and then, voila, she receives her groceries in 100% reusable packaging delivered in an EV. On Susan's next delivery, she returns the packaging to us. We wash everything and reintegrate it into our system. Susan says, the products are great quality and delivery is seamless. SpringEats is a waste-free intelligent system. Does your pantry look like this? Well, our members have beautiful Instagrammable pantries. Additionally, members and suppliers can track their impact with every delivery. The current food system is broken, but with our model, we're building efficiencies in inventory management and last mile delivery. On the supply side, we buy wholesale directly from farmers, producers, and makers. Our sourcing partner, Jessica, says, SpringEats is the only way for us to transition to a waste-free circular model. The result is Susan enjoying farm-fresh strawberries in our stainless steel clamshells. 82% of all our customers ordered every week for over 5 months. Our typical cart size is $110 as compared to the $75 industry standard. Our private beta is a top unpaid search result on Google. Our NPS is twice that of leading competitors. With a 97% return rate on reusables, we have de-risked the business. Our beachhead customers are active members of environmental groups. One Sierra Club chapter alone can drive us to profitability in Washington, D.C. We have monthly subscription fees of $25 and our margins of 5x as compared to other grocery delivery. SpringEats is an alternate food distribution system. Our infrastructure unlocks partnership opportunities with commercial kitchens and large campuses. Our first goal is to lead the waste-free delivery category in the mid-Atlantic that has a SAM of $25 billion. Our team specializes in management, data science, circular supply chains, food systems, and grocery. We received our first check from Jason Kalkanis and Molly Wood. Additionally, we graduated from the Launch Accelerator last month. This is a picks and shovels climate business. Let's build profitable and waste-free supply chains. I am Freedom, and I look forward to our discussion. Thank you so much.